Welcome to Satori Explainer videos. Visit our channel Satori Trading Official.
Welcome to the Explainer. Today, we're going to talk about something that feels a little bit like having X-ray vision into the market. It's called order flow trading. We are literally going to peel back the layers of a normal price chart to see the raw forces of buying and selling that are actually making prices move. So let's start with a feeling that I'm pretty sure almost every trader knows. You know the one. You see the perfect setup, you jump into the trade, and then boom, the price reverses just enough to hit your stop loss right before it takes off in the exact direction you predicted. It is so frustrating, and it makes you feel like you're constantly a step behind the big money. Well, this is the exact problem that order flow is designed to fix. So why does that keep happening? Well, the biggest problem is that most of the tools we're taught to use, like moving averages, the RSI, stochastics, they're all lagging indicators. They are built using past price data, which means they're always, by their very nature, looking backward. They're telling you what already happened, not what's happening this very second. And that, right there, creates this huge challenge. Trying to predict what's going to happen next by only looking at what's happened in the past, it's like trying to drive a car forward while staring into the rearview mirror. It's not going to end well. Order flow completely flips that around. It focuses on the live, real-time action that's actually creating the price movement right now, in the present moment. Okay, so what if you could actually see the forces that are causing the price to move as it's happening? Imagine seeing a massive stack of buy orders suddenly appear right below the price, just seconds before a huge breakout. That's the whole idea behind order flow. It's about getting that X-ray vision into how the market's engine is actually running. So this is really the promise of order flow analysis. It's not about trying to find patterns from yesterday's charts. It's about watching the raw, unfiltered fight between buyers and sellers as it plays out. You're seeing the size of the orders, how aggressive people are, and the imbalances that push prices up or down, sometimes before it even has a chance to form a new candlestick on your chart. And what's so cool about this slide is the total shift in perspective it represents. A price chart? That's just a history book. It shows you the effect of all the buying and selling that already happened. Order flow, on the other hand, shows you the cause. You're watching the auction in real time, seeing the supply and demand that's about to become that history. And hey, this isn't some newfangled idea. We're talking about legendary traders like Jesse Livermore doing this more than 100 years ago. They called it reading the tape. The old ticker tape just sped out every single transaction. Price, size, time. It didn't tell you why someone was buying, it just told you that they were. And honestly, for a trader, that's often all that matters. So, how do we read the tape in the modern world? Well, we've come a long way from paper tickers, that's for sure. Today's trading platforms give us this incredible, detailed view right into the market's engine room. Let's check out the tools. So the first and most basic tool is the depth of market, or what everyone just calls the DOM. The easiest way to think about it is like a price ladder. On one side, you see all the pending buy orders waiting to get filled. Those are the bids. And on the other side, you see all the pending sell orders, the asks. This is your direct, live window into the current supply and demand. By just watching this, you can spot these subtle shifts in pressure. Like, let's say you see a huge wall of buy orders at a key support level. Okay, that's interesting. But what's even more revealing is when you see that wall start absorbing a ton of aggressive selling without even flinching. Or even better, when you see a huge bid that keeps refilling itself every time it gets hit. That's a classic sign that a big institution is patiently buying up everything the market is throwing at it. Okay, so the DOM shows you what traders intend to do, but the volume profile, that shows you where the action actually happened. It's basically a histogram, just flipped on its side, showing you exactly which price levels saw the most trading volume. And this just brilliantly shows you the market structure. That point of control, or POC, is basically the fair value area where everyone was happiest to trade. The high-volume nodes act like gravity. They become major areas of support or resistance. And you can even look deeper at something called the delta within those nodes, which is the net difference between aggressive buyers and sellers. A high-volume area with a really strong positive delta, that suggests buyers were totally in control, making it a much more reliable support level. Okay, this is a super important point. Liquidity and volume are not the same thing. Liquidity, what you see on the DOM, is just potential interest. It's a bunch of orders just waiting around. Volume is confirmed interest. It's trades that actually happened. A price level can show a giant wall of buy orders, but if nobody actually sells into it, zero volume gets traded. Understanding that difference is absolutely crucial. Now, I know this all sounds pretty amazing, right? But before you go out and try to start reading the tape, we need a little reality check. It's really important to understand this is not some magic bullet. It comes with its own serious set of challenges and limitations. One of the ugly truths of the market is manipulation. A classic example is the stop hunt. This is where really large players will intentionally push prices just far enough to trigger all the stop-loss orders from retail traders. Why? Because it creates a big pool of liquidity for them to fill their own huge positions. Now, order flow tools can help you spot these traps, but you have to remember, you're playing in a field with very sophisticated players who are very good at hiding what they're doing. And getting access to this kind of edge, well, it comes with real hurdles. For one, professional order flow software and the data feeds you need, they aren't cheap. There's also a really steep learning curve to actually interpret the data correctly, especially when it's flashing by at a crazy speed. It takes intense focus, and as we're about to see, it's not even an option for every market. And this is a massive one. Seriously, if you trade spot Forex or CFDs, you have got to hear this. These are decentralized markets. That means there's no single central place where all the orders are collected. So that order book that your broker is showing you, it's most likely just their own clients' orders, or maybe data from a few banks. It is not, and I repeat, not, a complete picture of the entire market. This is exactly why professional traders who really rely on order flow tend to stick to futures markets. On a centralized exchange, like the Chicago Mercantile Exchange or CME, every single order from everyone gets routed through one central place. And that means the order book data, what they call level 2 data, is complete, it's transparent, and it's authentic for the entire market. What you see is what you get. All right, so let's tie all of this together. What's the main takeaway here? Well, it's all about a fundamental shift in how you look at the market. It's about going from being a reactive historian to being a proactive, real-time observer. At the end of the day, the goal here isn't to predict the future with 100% accuracy, because that's impossible. It's about gaining a small but very significant edge. By seeing the market's intentions unfold in real time, you can often get a head start of just a few crucial seconds over traders who are just waiting for a candle to close on their chart. And that tiny little window can make all the difference in the world. I love this analogy because it just sums it all up so perfectly. Traditional charting is like seeing a car make a turn and then trying to react to it. Order flow is like seeing the driver's intention, seeing that little turn signal start blinking before the car even starts to move. And that shift from reacting to anticipating is the real power here. And that kind of leaves us with one final question to think about. Charts are definitely valuable for seeing the big picture, but the real action, the real game, is happening right now. By learning to read the present moment, you open up an entirely new dimension of analysis. Thanks for joining us on The Explainer. Welcome.